It's interesting. I mean, today it shows you the market's in a bit of a tricky spot, right? You had this kind of ferocious bounce off the low, which was about a week before Election Day is when it took hold. And then today and yesterday, the market kind of stopped exactly where you might have thought it would in terms of how fast it had gained, about 6 or 7%, right at these levels that had given it trouble. Now we pulled back a little more than 1% from those levels, and it seems as if this pattern would be the same if it was forming a good bottom and this is a process of creating a new low for a fourth quarter rally, or if, we're still in this stressed environment where it seems as if we haven't really dispensed with some of the issues like higher treasury yields and aggressive Fed and kind of questions about the longevity of the earnings boom.
Jim, clearly higher for the week, lower today. When you assess the sort of technicals and the various market levels we're at, is it going to be hard to meaningfully shake off the negativity we've had in the last 5 or 6 weeks?
Yeah, I think there's been a lot more technical damage done in this sell-off than we've seen in previous sell-offs, the one we had early in the year and even last year. The NASDAQ, the Russell, the mid-cap index, the transports are all sharply below the 200-day moving average, and we hadn't seen that big of a break. And I think what happened here is you had a lot of people rushing out of these tech names at once. The doorway wasn't big enough, so a lot of people got trampled and it spread to other areas. So the moves there were more exaggerated. But now it's, where do we go from here? And you've got the Fed, as you mentioned. We have inflation to worry about. We have the trade wars to still be concerned about. That could soften GDP growth in the fourth quarter and the first quarter for next year. The good news about that is the Fed won't seem like General Custer anymore if you start to see the economy start to slow down, or Admiral Nelson, since we have the Navy here. But I do think we're going to be bouncing around a little bit as the market struggles to find new themes, which it has not done yet.
Professor Siegel, where do we go from here with stocks?
Well, I think the Fed on Thursday, by saying nothing, actually said it all. I mean, if they have any thought of pausing in December, they would begin to make noises now. They made no such noises. Another quarter-point increase into a situation, potential trade disruptions, slowing economy. Most estimates are under 3% for this quarter. And what I think is really troubling the market, I mean, the long bond keeps on tickling up to 3.25 like it's going to break through, and then it catches a bid when we get a sell-off on the stocks. But rising yields, I think, are the biggest immediate threat that the market has to contend with.